Welcome to the Wealthimize video. So today I have Seong Yeo with me, and we will actually want to give you an update of the US stocks and options market. Now, Seong Yeo, wow, looking at the stock market, well, the market has been down for the past, 1-2 months? So what do you think? Is the downtrend going to continue, or are we expecting a rebound soon? And what is your strategy at this point in time? Please share with us.
The picture doesn't look pretty, but this is not something I'm losing sleep over. Why? Because historically, August and September months are the two worst months in the US stock market history to actually invest in the US stock market. So this is the dominant trend that we've seen for August and September. It's gone down and it's actually hit one of the lowest points ever. I would like to think of it this way. What goes down must come up, right? So we are we've already seen the two worst months behind us because we're already in October. So I'm optimistic. I'm actually hopeful that we're actually seeing something like this. And I'm actually quite pumped up, quite stoked to that we've put behind August and September. We're going to see, and I'm optimistic. So in preparation for the possible rebound, what I've done is I've looked at stocks that have been dragged down by this 2 months of market down, and I want to see whether there are stocks that are good quality stocks but kind of become cheap today, or value stocks. So I'm happy to say that I've actually found 4. So these are definitely stocks I'm going to consider looking at including in my portfolio for my own investing. The theme is about preparing for the rebound, right? So now stock number 1. Let's talk about good quality stocks that are now become cheap. So what do we mean by cheap? So we use this investing ratio called discounted cash flow, DCF for short. Now DCF is principally a method to calculate what is the intrinsic or the fair value, as you can see over here, the fair value of a stock we're looking at. So a stock, like for example, stock number 1, I'm definitely very interested in is PayPal, because I like the business model of PayPal. I think it is a company that's well positioned for the future. It is basically a cash generating machine because it is like a middle layer between consumers and businesses. Businesses offer something for consumers to buy. Consumers got to pay, right? So they are the important intermediary. And us closing stock price of 58.59. The fair value is actually estimated at almost $112. So we're looking at the possible 50% margin of safety, meaning say that this stock can potentially appreciate by 50% over the course of the next few months. Because we don't expect the stock market to suddenly just jump up overnight tomorrow. It is not very likely. But assuming that we give it enough time, last closing price of 58.59. Imagine if you buy, if I were to buy 100 shares of this, okay, and it appreciates from 58.59 to this amount, I think I'll be a very, very happy investor. Okay? So this is stock idea number 1 that I'm looking at for my own portfolio. Number 2, Citigroup. Okay, so we saw that PayPal is a company that's operating in the fintech space, financial and technology space. I would like to look at a sufficient variety of stocks, not everything concentrated into technology or one particular sector. So I'm also looking at, are there any other stocks that have become fair value cheap, good for me to consider, given what is the business model, whether it fits my risk appetite. So Citigroup is another stock that I am very happy to consider to include in my own portfolio. Now, why is that so? Because it is in a consumer business. Consumers have the loans, right? So what other business than to be able to dispense loan and have a recurring income stream in the form of interest income? So Citigroup is currently for the last close is at $40.50. Looking at again at almost a similar upside of almost 50%. So the fair value is 72. The current stock price is 40.50. So you're looking at given enough time, enough runway for the stock price to eventually possibly going up to $72, $73. What's not to like about this? Stock idea number 3 that I've found is, hey, obviously, if you're an investor, if you're a serious investor, you will learn from what is the best that market has to offer, right? And who is the best person to learn from? Obviously, Mr. Warren Buffett himself. So his company, Berkshire Hathaway, Class B. Class A is just too expensive. It's a couple of $100,000, well out of my league. Class B shares definitely can consider buying. The stock price or the last close at 348, you're talking about potentially increase, going up to what is the fair value of $459. So imagine you buy 100 shares and you eventually can enjoy a potential profit of capital gain of $100 per share. $100 per share times 100 shares. So they're talking about what? 1,000? Okay, just buying 100 shares will give you a good profit, capital gains of 10,000. Why not? So these are the 3 stock ideas that I am looking at seriously. And stock idea number 4. So you mean this is something that you like, I believe, because Dollar General is, the last close was 103. In fact, this stock, we've been looking at it for a long time for our options, and there's actually no fundamental reason why it should drop to $103. I really don't understand. The only conclusion I can draw is market is just irrational. So the market being irrational means it can offer us opportunities. And so I think this is an opportunity that I will not pass by so easily. You're talking about more than 50% upside, potentially speaking, with a fair value of $228. Why not? And if you notice that I did not actually focus on one specific team or concentrate my stock ideas into one very narrow specific team of whether it's technology or finance. So the first stock idea is PayPal, right? So that's in finance, technology says. Stock idea number 2, Citigroup, which is in finance, the over type finance, brick and mortar type finance. Stock number 3, investment holding company. Stock number 4 is retail or consumer discretionary. Dollar General is essentially like our value store in Singapore, on the US side, that is. And these are companies that have very strong cash flow, very sound business fundamental. The business model is just solid, and there's just stocks that are good. For lack of a better word, these are just good quality stocks that have presented themselves as attractive opportunities for me to seriously consider and not just pass up easily. With that, I'll hand the stage back to you, Emin.
Thank you so much, Seong Yeo. So yes, just a quick summary. So basically, we believe that the market probably is actually in a good position for rebound if history is a guide. And of course, we actually are looking at some undervalued stocks, which has came down because of what happened the past 1-2 months. Of course, whatever that makes sense to us may not make sense to you. So please do your own due diligence before you put your money in. So hope you like the content we have prepared for you. And if you have learned something for this, do us a favor, please click on the like, share or subscribe button so that more people can enjoy the content. At the same time, it will motivate us to continue this series. Hope you like this. And with that, happy investing, everybody.